You are listening to chartingwealth.com for Friday, the 4th of May, 2018. I'm a little under the weather today with a spring cold, so please forgive me if you hear me take a break to blow my nose through the course of this presentation. I will try not to do so, but I'm going to go ahead and ask permission at the beginning. What do we see going on in the market? We see that stocks are down, bonds and gold are up. And as we go through the market, we always start with the S&P 500 on the weekly chart. And so far, we see a spinning top, which of course means indecision, not as much as the indecision we saw in the prior week with the doji, but indecision tending down. We have a down day 0.22%. In the S&P 500, we see that our price percent oscillator, which was pretty much flat the prior week, is headed down again. Derivative oscillator, however, continues to lose downward momentum, and we are just below the weekly trend line. We can end up redrawing that at the end of this week. Still a confirmed down move since the 9th of February. We look at the two-day chart. We can see that it is almost an unbroken band of down moves, except for a spinning top, a green spinning top back on the 30th. We may end the week with a crossover going down, and again, that's just on the two-day chart, but this candle's not going to close until the end of the market on Friday. We'll see what the latest two-day candle shows for us, and if indeed we do transfer things over. If we see the week in that way, of course, it will mean that all the up moves we saw from the 4th of April until the 18th of April have just sort of petered out as the markets slid sideways and down since that time period, starting on the two-day candle on the 20th, and we'll just continue to keep an eye on things. That, of course, will mean over the course of the next week, we might be able to find a potential down trade on the market. We see that the 4-hour chart, when we look at it, bounced off the red signal line back on the morning, going into the afternoon on Monday, the 30th of April, and then things bounced down sideways, and then, of course, big down movement in the morning, according to our Heiken Ashi candlesticks on Thursday. A little bit of an up move in the afternoon. Derivative oscillator heading down. Price percent oscillator not at the same strong angle it had been in the morning. A little bit of recovery in the afternoon, but we'll keep our eye on things. We might have a weekly we might have a two-day vertical crossover toward the end of the week, which could set us up for some potential down move plays in the S&P over the following week. We, of course, will keep you posted. What do we see on the Qs? QQQ, that is the NASDAQ 100. Of course, it crossed over going down back on the 23rd of March. We had 3 weeks of down movement, then 2 weeks of up movement and sideways sliding. Since then, so far, we have what appears to be a green doji forming, which again means lots of indecision tending up. But we look at our price percent oscillator, we see that it's still steadily heading down. Derivative oscillator, however, losing downward momentum on that weekly chart. We look at the two-day chart. What do we see? We see, again, it sliding sideways, first day of the latest two-day candle. And it is apparent, we've just been almost laminated on the red signal line as far as our price percent oscillator goes. Derivative oscillator losing upward momentum. Still positive at this point in time. So we'll keep our eye on things. We may have a crossover at some point, but let's look at what that 4-hour chart's doing. It's now bounced off the red signal line with a bit of a pull up in the afternoon after a down morning on Thursday. So again, keep your eye on things. Like we said yesterday, if we see things starting to tumble on Friday or even Monday in the morning or afternoon, you might have a crossover going down on that 4-hour chart, and that may at the same time pull the two-day chart over, might give you a jumping in point. So keep your eye on the price. You might have a jumping in point for a down move on the Qs. This market is really trying to sort its way out. But remember, all things being equal, markets always tend to move in the direction of the largest chart, and the largest chart is the weekly, and it's still confirmed down on the NASDAQ 100, that's QQQ, and SPY, that's the S&P 500. Keep that in mind. Okay, what do we see going on the weekly chart on bonds? We had an up day 0.45%. So far, we have a green spinning top for the week. And again, derivative oscillator losing momentum. Price percent oscillator looks like it's just laminated on that red signal line. Thought we might have a crossover going down back on the week. Last week ending the 27th of April. That didn't happen. Don't know if we're going to have a crossover going down at the end of this week or not. We'll have to see how things end up on Friday, and if we have a weekly vertical crossover, we will let you know. Derivative oscillator still in the positive. Of course, what do we like best? We like things to cross over at the same time. We like the weekly and we like the price percent oscillator and the derivative oscillator to cross over in the same direction at the same time. And again, don't know that that's going to happen if we have a crossover tomorrow, unless there's a big plunge going down in TLT. And again, are of course not predicting that happening. What do we see going on the 2-day chart? We see that it is in the negative, although the latest candle is a bit of an up move. Again, pretty much matching the latest up, the prior up candle for the 30th of April. We'll just keep our eye on things. Again, still in the negative on the 2-day chart. What do we see going on the 4-hour chart? Well, of course, it crossed over going up in the afternoon on Friday the 27th. Went on up for another day, then down for a day, and then pretty much sideways since then, tending up a little bit. But the price percent oscillator is headed up. Derivative oscillators continuing to lose momentum. So again, want to see what happens on the big chart, and there's a good bit of indecision right now. We'll see what happens. We'll let you know if there is a weekly vertical crossover going down at the end of the week. We don't know that yet. Lastly, we go to gold as we always do. We are entering into the second week of down moves on gold. Remember, gold crossed over going down all the way back on the 16th, immediately the 16th of March. And of course, immediately following that, went up for 2 weeks, a little sideways for a week, then up for another week. And of course, didn't start moving down strongly until the week of ending the 27th, last week, the 27th of April. And of course, this week has been another down week as gold continues to move down. Derivative oscillator gaining downward momentum. Price percent oscillator also stroking over, going down. What do we see happening on the 2-day chart? It continues to move down. However, with the up move about 0.5% over, a little over 0.5% for the last day, we see that the first day of the latest 2-day candle is pushing through what had been a pretty decent, well, we're going to redraw it with the latest candle, trying to push through that latest trend line. Derivative oscillator gaining downward momentum still. Price percent oscillator still headed down. So gold still in a down move. And of course, what's going on with that 4-hour chart? That's the tell-all for us. We're having a pullback, which is nice to see. And again, our 4-hour chart worked pretty nicely this last time. Remember, our oscillators work well when the market is trending. When the market's not moving a lot, things get sloppy. But it's nice to see the 4-hour chart working. Is it going to cross over going up and give us a pullback? May do that. If it does, then of course, if it's not too much of a pullback and the 2-day and the weekly stay in continued down moves, when it rotates back over going down, we'll let you know. That'll be a time to jump into a practice trade. So we got a lot of things potentially setting up. Remember, we've now entered into sell in May and go away, live to trade another day. When the market slides sideways, makes herky-jerky moves as so much of the volume starts to pull out of the market for the summertime. And again, this is the toughest trading time of the year until we enter the fall-winter trading zone, which is the fat, beautiful time of the year. Remember how wonderful it was this last year. Well, this is the time to train and to practice trade and to watch these markets. It's not the most fun time to do it, but if you want to be a market master, if you want to be a charting master, stick with us, stick it out. the prize will go to those who persevere, and I know you can do it. Hey, if you haven't already pre-ordered our book, please do so, Charting Your Way to Wealth. It's beautiful, looking really great. We'll be getting it back from the printers here very, very soon. Also, we have available and are shipping out right now the Trader Journals. You can buy a year's worth. That's 4 of the Trader Journals, that representing 3 months of daily market worksheets, weekly market worksheets, and trade worksheets. And if you buy a year's supply, we give you 15% off. Just check out the show notes, either at the YouTube channel or chartingwealth.com itself, and you'll see the links to be able to purchase the materials. And of course, your purchases help support us here for all the free content and everything we give out. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.